Good afternoon from the floor of the CME. This is Chris Robinson. With today's Traders Exclusive comment, I'm going to hit very briefly on corn, wheat, and beans, and then talk about cattle, and then I'll get on my way. Okay, so what has happened? In the past week, we had our correction. Both corn and soybeans gave back half of their rally. Soybeans rallied $1.30, dropped back 65 cents. May corn rallied 42 cents, gave back 22. So what's the setup? The setup is we're heading into, we're 1 week away from USDA planting report. It's a very big report. Historically, this report can really move the markets. Doesn't guarantee it's going to happen now, but what we're looking at is a great opportunity. The fact that we're halfway back of the recent trading range, it gives both bulls and bears opportunities to put your money where your mouth is. It's very important, but this report coming up in a week, it could move prices significantly if there's a change in anticipated acres. What people are worried about is the fact that farmers may be planting up to 2 million more acres of soybeans. If that happens, you could see the price spread between corn and beans move. So there's an opportunity for you there to look at coming up next week. What's the managed money doing? Well, it's long. It's long 1 billion bushels of corn and 1 billion bushels of soybeans. And they're not going to be able to get out of that position between now and next week. So they're going to go into that position long. They're still short wheat, probably about 70, 80,000 contracts. That was the biggest surprise move, though. We talked about the weather market in hard red winter wheat a couple times. We'd had a really nice rally. Kansas City rallied over $1. But then once the weather forecast changed, we had a severe correction. And in a matter of about 5 or 6 days, we took back more than half of the rally that had taken about 2 months to give us. So you see that time and time again. Pull up a Kansas City wheat chart. You'll see we go up the escalator and we go down the elevator shaft. So we're heading into this report, lots of opportunity based on the recent movement in the grains. Switching over to cattle very, very quickly. We've had a tremendous move lower in the past 2 to 3 weeks as the managed money has liquidated longs. They were long about 100,000 contracts of fat cattle. They've been liquidating that. That little bit of liquidation really put pressure on prices. So we're at 6-month lows in cattle for both fat cattle and feeder cattle. You've also had a situation where lean hogs have basically given back all of the rally that they enjoyed prior to January when you had a big bid up in prices. So you've got livestock prices that are depressed at 6-month lows, and you've got the grain prices which have had a good rally in the first quarter of the year and have given a big chunk of that back. It's a good setup for some action over the next 2, 3, 4 weeks. Focus in on the March 29th USDA report, though. That's going to be a great opportunity for both bulls and bears. And again, it's an opportunity. So many people have opinions and thoughts and hopes and dreams. It's your chance to put your money where your mouth is. This is Chris Robinson. Have a great afternoon. If you're looking for help with your trading or hedging, give me a call. Look me up on the web.